Today, I took a buy trade.
You what?
Welcome back to the channel, guys. We're taking a look at a trade I just put on for gold. I just went long this morning after our brief intraday pullback, and I want to go through this trade with you guys here. Now, of course, I'm trading on Webull. As a US client, I can't trade CFDs, so instead, I just trade GLD, which is an ETF that tracks the price of gold. Check this out. Price hit a daily level of support, and after this rally, I felt like I missed the boat a little bit. But also the EDGEFINDER pointed towards some bullishness for gold, and I decided it was time. So I picked it up as a pullback here, and I shared an alert to our members here inside of the Discord. I'll show you what that looks like here. So I just shared this trade. Let's go through the alert. Now, by the time you see this video, of course, the alert has been out for a while, but here's where we're at. I went long 1957.4 approximately on the gold spot price, and you can see here my analysis. So I went buying today's intraday pullback after major support off the daily chart, like I mentioned, weekly and daily chart uptrend overall. COT report, which I'll show you stuff here in a second, shows strong institutional buying the last few weeks, and I've got stops below daily support. So let's take a look at the COT data, and I'll break this trade down for you very, very simply. Take a look at where we're at. Institutional money is very long. 77.73% of contracts tracked by the COT report's non-commercial traders are long. So big money is buying gold at a pretty rapid pace. Not only that, take a look at this. The change in shorts as of the most week-to-week reported data showed a decrease in short positions on the gold market and an increase in long positions, putting us further into long percentage territory and giving me extra confirmation to my trade. Now, if you guys do not have access to this data, remember you can get access now for our summer software sale for the EDGEFINDER. I'm over here, you can see me. Get the EDGEFINDER Pro as well as all of our MetaTrader robots, indicators, and scanners free with your purchase. If you decide to get this by the end of our sale, which is ending soon, you'll get access to a massive $800+ savings. And all you have to do to get access to the sale is message us on our website. Again, there's gonna be a link down below in the description. If you have not done this before, click that link. It's gonna take you to a direct message center and just click chat now. Click tell me about the summer sale, and one of our support reps, it's a real person, not a robot, will tell you about the discount that we're doing right now, which is ending soon. That's why I wanted to make sure you guys see it so you don't miss out on the updates. So let's go back to this gold concept for a little bit. You can see here on my trading view where I entered. I entered right here on that pullback intraday on stream actually today while I was talking to Tom and Frank. I really liked the analysis here. Yes, it's kind of the middle of a zone. But intraday, we had a nice pullback to support, and this daily level is so strong on the gold chart that I decided I would go ahead and join the move with an anticipation of moving back to the 1980s. But the real question will be, if we get to 1980 and I'm able to start trailing stops, can we actually get the breakout? That's for another video, I think, in the future. Stay tuned for that, of course, going forward. Let's talk about the dollar. Here's DXY, which you can see is kind of just a messy sideways chart. I think I will probably have to get stopped out of my gold trade if this thing breaks clean high. But it does seem like we've kind of traded into a sideways range where the bulls have been kind of not just given a chance to just run free, right? Bulls have kind of been suppressed. We're kind of trading sideways. So there's not too much interesting when I take a look at the dollar chart. What about the euro? The euro gave back a lot of its strength here, we have to admit. But again, kind of trading sideways from that downward trajectory that we had previously. Now, a quick look at the other metal that I pay attention to, which is silver. You can see silver has a really bullish looking chart in my personal opinion as well. Take a look at this support zone, which has held very nicely the last few days off of the 4-hour chart. A pullback into this area also looks bullish. I just already have gold, which of course, if you know, gold and silver generally move together, but in a bull market, silver actually tends to outperform. So I'll keep an eye on silver if the metals market starts looking hot again. That's probably something I'd pay attention to closer. Let's have a look at retail sentiment on the EDGEFINDER as well. We went ahead and made this page a little bit easier to read, by the way, guys. You can see all the different assets on the major currency pairs. And of course, we can change this to anything we want. Indices, commodities, cryptos, etc. Check out, though, with me first, the currencies world. You see Australian dollar retail traders are very short. Dollar yen retail traders are very short. And if we flip things around to the bull case side, retail traders are really long dollar CAD, Euro USD, NZD USD, and slightly bullish on pound USD. The reason I point this out is I generally try to avoid trading in the same direction of retail. Not always, but in a lot of cases, I find it to be kind of a trap to trade in the direction. So think about your current positions and ask yourself, am I trading with the majority here? For example, Euro USD. Now, this is not the majority of all traders. It's the majority of retail traders who typically lose money. This is not including, of course, professional grade traders that run hedge funds and banks and things like that. Let's have a look at the commodities and indices market as well. Here's a look here at gold, which retail traders, I love to see this. Retail traders are shorting gold now at a pretty rapid rate, 60%. This adds extra confluence to my gold trade, which I'll talk more about in a moment. We also see indices like NASDAQ, S&P, JP225, DAX, all very short bias from retail traders. Oil is the one that retail traders are very long on. Of course, it's not an index, but it is a commodity that is worth paying attention to. Seasonal trends on gold might also be something I want to show you guys. So take a look at this. If we go find XAU USD, we can pull this up and I'll show you the seasonal trends projected by the EDGEFINDER. The EDGEFINDER, of course, takes into account all previous price action of the last 10 years and 5 years respectively and gives us an average. So we're in the month of June, which shows a slight positive expectancy for the price of gold. So again, this is going back historically and saying, how does price tend to do during this month? And of course, you guys can do this for any asset you want if you do have access to the EDGEFINDER. Yes, I'm showing off the EDGEFINDER, but I genuinely use it in my my analysis each and every day. So if you guys don't have access, remember that sale details will be in the description down below. So let's keep going and talk a little bit about the chart here for some of these assets. Now, on top of the gold and dollar stuff, I wanted to talk briefly about dollar yen. Tom on our live stream today made some interesting points about a trade he's in. He's currently long dollar yen, and I'm actually long dollar yen as well. I've got a swing trade position open on, a position trade open on dollar yen. Here's a trade I shared with members yesterday. This one is floating in profits very nicely, also based off of COT data. This, of course, shows you the chart that we looked earlier at the gold idea. We see a similar sort of exposure for dollar yen. So I've been bullish on this one as well. Basically trading up with the yields right now. You see the US 2-year making an advance higher, which is of course helping the dollar yen, which is highly correlated to that market. Back to gold for a second. I wanted to show you the individual page for gold. So take a look at gold and we can see why I'm so bullish overall. We get a +3 here, and there's a couple things I want to point out. Institutional money is long. Retail traders are short. Seasonal trends suggest the month of June could be positive. The trend is not necessarily in our favor just yet, but I think things are breaking out and looking promising as a sideways sort of trend occurs right now. So I'll go against that, even though the daily chart is not quite giving every signal that we want there. GDP growth, inflation, and unemployment lend towards more bullishness for gold. We saw a shrink in the GDP in the most recent one, which is of course a bullish factor for gold, and unemployment ticked up, causing concerns and of course an increase in the demand for gold as well. So yeah, something else to think about. We also have money supply expanding a little bit here in the most recent filing, which shows bullishness for gold as well, as more money in the system generally finds its way to gold. Check 2020 for reference there. And again, if you want just for fun, we'll take a quick look at that. And then I want to hear from Tom on the live stream about his dollar yen idea. Here's 2020 as promised. We'll go back to the chart there and I'll show you guys what happened there. This is a period of time where money supply increased dramatically, and this is what was the effect on gold. So something there. Check out dollar yen from Tom's POV on today's live stream.
US dollar, Japanese yen as well, guys. You know, we've just to support what Frank said, really. You know, on the day chart, the weekly chart is what I really like, yeah, because the weekly chart has broken this real, you know, important piece of weekly resistance. Yeah, it reacted here, and this candle was just sailed through that area of resistance. So the weekly chart really supports our ideas. Even last week's candle with this wick has had a huge, you know, push off that level. I talk about wicks far too much. I should get out more. And then if we support that with the day chart, then, you know, it again, we're in an uptrend. Yeah, we're at this gray zone, which we know is weekly, was once resistance, now support. We've had this bullish candle, Yeah, I don't like yesterday's red candle, but you'll see on the lower time frames the H4, trend is coming back, and we've just had a very strong H4 candle. So let's look at the H4. Yeah, I mean, look at that H4 candle. We was already in a H4, uptrend. As soon as we got a break of all of these highs here, we've been in an uptrend. It's retraced to a nice area of value, and we've got this very bullish H4 candle. So I'm actually in this trade, entered at this grey zone, and yeah, be looking to take it back up to here. And yeah, this is how I roll. I close 80% here, and then I just let 20% run, so half of me's intraday trading, and then the remaining 20% is like a swing trade, if you like. So yeah, just the US dollar yen. I like the looks of this right now as well.
Hey, guess what? I just found a video made just for you. Click this video to help with your trading, and thanks for watching.